So just before thinking about the intergenerational thing, I think the other thing I wanted to kind of just talk a little bit about was this issue of how the other key comparison with the financial crisis in 2008 is the extent, I think for me, one of the surprising things is the fact there's been no asset price crash. If I looked at what has happened to house prices, okay, the house market in the UK and in the US, the housing markets ground to something of a halt, but you've not seen that asset price fall. Now, I don't think that's just because we've got these kind of UK-specific policies to try to support the housing market. We see it in the stock market as well. We've not seen the same financial asset price crashes which we saw in the financial crisis. And I think that at the heart of it is why we think people are in a much better situation and why we might expect the kind of runoff out of the recession to be much quicker.
I think that's a really important aspect, and I think again it links into the issues that we've just mentioned, because one of the big questions to me is where is the inflation with all of this? Because since the global financial crisis, with the measures that we've taken, there's been a huge amount of monetary support. Hasn't been that much fiscal support, but it certainly hasn't been contractionary. And there's been a global economic boom that has also been accompanied with very robust stock markets. And so I think the question is, we would have expected inflation to come back. We were worried in the global financial crisis about deflation. And I think we were starting to see that come through, which to me was a great positive, because with the big drivers you've had that have been deflationary, the globalization, the automation and the digitalization, I think that has pushed the bargaining power of labor way down as one of the core sources of inflation. And the resource boom that we had and that we're still waiting for in terms of the demand to outstrip the supply also means that there hasn't been much raw material cost inflation at all. So the two core drivers of inflation haven't been there. Yet we've had this economic growth, we've had this wealth creation. We've had these low rates at the same time that have been put in place and have been maintained. And I think that what we've seen now is, in my view at least, that all that inflation has gone into assets. And I think it's gone into the real assets. I think it's gone into real estate as one of the main asset classes. And it has gone into liquid investments as the other major asset class that people can buy. And I think fixed income is highly compressed. We have zero or negative rates. I think that is in part a policy question, but it is very clearly in part a supply-demand issue, that there's simply so much demand for government debt and for high-grade corporate debt that it has compressed the yields. And at the same time, in terms of real assets, then companies in the stock market are the key assets that people can buy. And so I think what we've seen, and it is linked to the overall situation, I think it is also linked to inequality, because obviously in order to have assets that can inflate as they do, you have to have the capital to be able to buy them. But I think that's what we've seen. And so my hope is that as we look forward into this year and into the recovery from the recession, I think this asset price inflation that we've seen, I don't see why it won't continue, but I'm hoping that it will then also translate into a broadening of the economy and of inflation, in the sense that the incipient wage inflation that we saw prior to the pandemic will take place again, because people will find jobs. It's been set back, but the underlying dynamic will be there. And I suppose raw material price inflation may take place as well, which has taken a hit, but what I think is of less of an impact for the types of economies that we operate in.
So it's interesting, this issue about inflation being good. And I think it comes back to this issue of inequality. And you talked a little bit about this in terms of the wage bargaining, in that I wonder how wage bargaining is going to change on the back of this. And the reason I'm saying that is, if I thought about inflation just increasing people's costs without actually feeding through into wages, then clearly it's not a great thing for the people who have borne so much of the cost of the pandemic. And I wonder if it's going to lead to a change in wage bargaining powers. I mean, we see that a little bit with the push to get higher wage settlements for key workers. But I wonder, it would be interesting, I mean, I suppose it's one of these kind of big unknowns, is how we're actually going to see a change in the way in which pay carries on or at different sort of levels. And I suppose related to that, how we think about taxes at different levels of incomes changing over time. And I suspect, my feeling is that the people who are at the further up the distribution are the ones who have been able to maintain their incomes and will end up paying higher rates of tax as a result.
Even if you just thought about what the central banks would be thinking, I mean, a bit of inflation would be really desirable. It would also be helpful to the extent that it's slightly higher than is expected. It would also help erode the burden of the public debt. So at least on the policy side, a little bit of inflation is not to be sort of something to be scared of. It's been very interesting, though, if you watch the US debate recently, just after President Biden's come in, there's been a big debate about the size of the stimulus being proposed and the extent to which it might be going too far and might therefore be inflationary. I mean, most central banks have undershot their inflation target for quite a while. Now, you have to have a pretty asymmetric view of how quickly, once you go a bit above inflation, that this sort of inflation spiral can start to kick in, to be very worried about going there. You know, I think we have that view on the downside, as Chris was saying. In the financial crisis, we really worried that we would hit deflation. And like Japan did in the 90s, you get stuck in that. And as we've seen with Japan's case, you can be stuck in that for 20 years, and it's very difficult to get out of. I'm not sure I share, but again, I think reasonable people can disagree on this, but I'm not sure I share the view that if we were to sort of slightly go above, say in the UK, our target is 2%. If we were to go to 3% for a couple of years, I'm not sure we would get into a kind of spiral that was impossible to control. And I think it may have some positives. One of those positives may be the old argument of greasing the wheels of the economy, and it would certainly get wage negotiations and how Labour can argue for higher wages back on more prominently in people's thinking. Whereas I guess right now, the more pertinent concern for people is the extensive margin. Do I have a job or not, rather than exactly whether I get 1% or 1.5% increase next year, because they're the sort of numbers of inflation we're talking about. But it's also worth just remembering that even in the period before the financial crisis, when central banks were hitting their inflation target, they were typically doing so in a very uneven way. So, I mean, through the early noughties, the Bank of England never missed its inflation target. And again, its target is for the aggregate price index. But at the time, goods were actually falling in price. So if you happen to be a consumer who consumed more of goods, you were actually experiencing negative inflation. So your pound was becoming more valuable over time, whereas services were going up in price. So you had sort of plus 5% and minus 2 or 3%, and they were coming in at an average of about 2%. So, you know, it's never the case that inflation affects everybody equally. But there's certainly, I think there's an argument that policymakers should not fear a little bit of inflation in the coming years if they can generate it. I think, in fact, they should welcome it.
So what about thinking about the kind of real economy in a way? In some sense, I know that these kind of two things, the real and the nominal, are clearly going to interact. But if I think about the kind of main challenges which I think the economy was facing going into the COVID crisis, it was really about the low productivity. And we saw this very kind of low productivity growth over the last sort of 10 years. And I wonder if we think now about the crisis, I know, Chris, this is this expression you've used, but do we think about this as being a risk or as an opportunity? Is this a kind of an opportunity for us to kind of seize on productivity differences and try to build out of this, or if it's going to be a kind of situation where people who were previously low productivity will then remain in that kind of low productivity spiral downwards?
Yeah. Well, I think that the crisis has exposed a lot of underinvestment. I think both in terms of actual capital type investment, but in particular in terms of human capital that we've seen in the UK, but I think we've seen it in the US and in Europe as well. I think one aspect of that is the healthcare system, which has been shown to be woefully inadequate in terms of its overall capacity in order to absorb the temporary increase in demand for ICU beds, but also for equipment and in particular for care over that time. And so I think that has to be an opportunity for both the public and the private sector to invest and to create employment through training, through resources and through innovation in order to put us into a position that we're better equipped to weather the next pandemic when it happens. So I think that is an area that I think is of great significance. And I think the second one is something that we mentioned at the very beginning, which is this question of remote working, the type of thing that we're doing now, and how that will impact productivity. It seems to me that there's a lot of benefits to this shift from offline to online. I think one of the elements is the fact that you have these fulfillment centers that are in remote areas of many countries, certainly of the UK, providing employment and flexible employment in areas where that wouldn't necessarily be the case. And actual remote working is a means for people to become productively employed, in particular in potentially more value added, potentially higher paying jobs without having to move, without having to expose themselves to the higher overall cost of living, for example, of London, that they would have. And we see many people, of course, doing that, I think also in our businesses and in our environment. But I think those two aspects are ones that should make me certainly quite positive about the potential for higher productivity.
So if I can just add on top of that, two points that I think are worth drawing out. One is this really big question, which is we don't just want growth. We clearly want the right kind of growth. Now, what is the right kind of growth? Well, I think one that's driven by productivity rather than, say, hours input would be something. But how do we get that? How do we generate the jobs that are high productivity jobs? Because certainly around the financial crisis, a lot was made of the flattening out of the productivity, which had been growing. It sort of flattened out and really hasn't recovered since then. It's been essentially flat per hour worked in the UK since then. But a flip side of low productivity is, I guess, the labour hoarding story, which during the recession, we didn't fire as many people, but everybody was just less productive. And the question again of whether you have more people working but at lower productivity or less people working at higher productivity. It's what we ideally want is lots of people working at high productivity. That's the sort of the target. But how do you get there? How does a government generate policies that get you there? And I think there are a number of challenges. One is we know from the sort of history of industrial policy that governments are not necessarily the best at picking winners. So what you really want is governments putting in place conditions that are favorable to enterprise finding the right sectors, incentives to find those sectors. So I think that's sort of side of things. The other challenge I find with this is that the horizons that you need to have to think about these policies are not the usual parliamentary cycles of 4 or 5 years. These are things that you want to be planning 10 plus years out. And I think that adds a challenge. The second thing I wanted to add is to build up on this point you said earlier, Hamish, but it's an issue of flexibility. So I always make the analysis, the analogy, with the number of times I was once flying to Denmark for a conference, and my flight was delayed because there had been 4 inches of snow at Heathrow on the morning of the day I flew, and I flew at like 3 p.m, and there was this 4-hour delay. When we landed in Denver, there had been 4 inches of snow in the hour before we landed, but it didn't affect things. And the reason was Denver is used to snow. They have invested, they heat the runway, they have snow plows galore, they have put a huge amount of investment in there. You could do that at Heathrow, but it's very costly and it does one job. And that job would only be used every so often. So I think the question of health investment, which I think is really important and really key, is where are we going to put that health investment? I can imagine a world where every country start ramping up its ICU capacity. But the next challenge or at least one challenge that's coming is that related to geriatric care. The populations are aging. How do we look after them? And intensive care is not necessarily where they're going to need to end up. And so if we put all that investment in there and it's sort of stuck as ICU, and we all learned this, that an ICU nurse or an ICU doctor has a different set of skills and training to other doctors and nurses, as of course all specialist subjects do. How can we have a health sector that is flexible enough to deal with a pandemic, and increase capacity. And I think the NHS has done a fantastic job within its constraints. But then also, how do we plan for the health challenges that either we can forecast, but they're a long way out, or the one that we haven't forecast yet, because the next pandemic might not be the same as this one, or the next challenge in the health sector might not be the same as this one. So I think flexibility is a really important word in all of this.
It's true that the flexibility kind of really matters. In some ways, I think the flexibility of the NHS to deal with the acuteness of the situation is kind of been pretty staggering in a way, in my mind. And I think that as you said, where we've really failed is in our ability to deal with the long-term care and the way in which the pandemic went through the long-term care sector. And I believe part of that will be because we haven't actually invested in long-term care, and we haven't allowed the salaries and the wages in that sector to keep pace with the rest of the economy. And I think that's going to be a real challenge going forward, is whether we actually take that on board as one of the kind of lessons learned. The other thing about flexibility, which kind of raises, is really about, is it really about the healthcare being more flexible that we should be worrying about, or is it the firms being more flexible? I mean, I think a lot of this really comes down to the workers being flexible and actually thinking about how do we generate skills which are not firm specific. I think one of the, in some ways, what we're in a situation now is it's very easy for us, as you suggested, Chris, it's very easy for us to move firms, move employers, because we don't have to move location. And in that sense, we would then have a lot more skills, or we've got the incentives to develop skills which are not specific to any particular employer. And we've got much more incentive to look around for what sort of employer is going to make the best use of us, of our skills. And I think that sort of shift towards having a general skill set which can be employed in different places is, I think, the real change which we've seen a bit of in the last 10 years or so, that kind of movement away from to more general skills. But that seems to be developing this general skills seems to be a key thing to getting the flexibility right. If all flexibility means is that we stop working in a restaurant and we go to work for Deliveroo, then that's not the sort of flexibility which is going to lead to efficient productivity increases or to growth in the economy.
And just, if I could just add one, if I can mention the B word, I think that need for flexibility becomes all the more important in the UK. I think it's important in all European countries and across the world right now, but particularly in the UK, where immigration from the rest of the EU is not going to be this kind of the place where firms can look to fill gaps in skills, which of course has been an option up until now.
Yeah. Well, I think it's really interesting because it's a supply and a demand issue, right? In the sense that there clearly is tremendous demand, and I think it's one of the things that I think was driving the full employment that we've seen in many European countries and in the US prior to the pandemic, that I think was then slowly, gradually translating into wage inflation, as well as labor in, I think, very traditional classical ways was getting bargaining power. And that you had these shortages. And I do think that Brexit will have a very important impact on that. And I think it will be very interesting because I think for the UK, the pandemic has set back some of these pressures, and Brexit will have, to some extent, set back some of the pressures, but exacerbated them. So I think that that will be a really important element of it, but it's an optimistic one. And I completely agree with what Hamish said. I think the aging of the population is a tremendous challenge, a tremendous financial challenge as well, for governments and for people with their savings, but not unlike the income support that's been provided to people and that has either been spent or saved, as we were saying earlier, the kind of Social Security or retirement payments that are being provided and will be provided to an even greater degree to older people will also go straight into the economy, right? I mean, some people may be able to save and pass it on, but the majority of people will need to spend it on care. And that, again, sets off, an economic cycle, because it means there's a demand for labor. And as there's less supply, that will lead to greater wages and then also greater income. So I think and as Hamish was saying, I do think of these things in many cases as opportunities, and try to focus on them that way. But I think that is a tremendous opportunity, and providing the skills for it will be of great importance. But I want to shift the conversation to something else that I think we've alluded to, which is the question of how to deal with that for people who already have the experience necessary to be able to get those jobs. But the very important question about how to deal with that for people who don't. So people who are in school or who are finishing their secondary education or who are in the beginnings of getting their academic or a professional education, and for whom this entry into jobs is going to be, I think, very difficult, because it's one thing to have the experience, to have networks, in some cases to have the networks that come from physical interaction with people and friendships and relationships. But I think it's quite another for people who are going to have gone through this over the past 12 months, and who may go through something similar over at least the next 6 to 12 months before there's even a suggestion that we will all go back to work in the way that we used to. And how to provide those kinds of settings, including settings like we're participating in right now, of course, I think is a tremendous challenge that's going to require a government and academia and similar institutions to address.
It is interesting to think about how, if you think about you're kind of thinking of the people who are entering the labour force now, how do we think about helping them to develop their skills? And I think that's completely crucial. And in some ways, I don't think we've been imaginative enough about things like saying, should we defer university entry by 6 months? Should we give people an extra 6 months at the end of sixth form, extra 6 months at the end of the GCSE to try to actually give them the skills which they need? In a way, we've thought about education, and the focus on education by the government and a lot of the discussions has been on how do we give people the qualifications at the end. Do they get the A-level certificate that's got an A in it or an A star? And to my mind, that's not actually the issue. The issue is if you've missed half your schooling over those 2 years, no matter what it says in your certificate, you've not developed the same skills that you would have got if you'd been there the whole time. And so I think that the focus on, when we're talking about education opportunities, has been too much on what's the certificate you've got at the end. Have you actually still got your GCSEs? Have you got a way of achieving that? As opposed to thinking, what are the skills which you're actually missing? What are you actually going to need going out into the labour force? Does that mean we need people to then essentially take an extra year at school, put an extra year on the end, and then let people actually develop those skills they're going to need going forward?